episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol SOXL. My name is Chris. Today is Thursday. I don't know why I would say today is Thursday. It's Monday, July 7th. I guess I'm a little frustrated because I did leave some money on the table today. I'm not sure why. I'm gonna have to go back in detail and look at the time of my sell, but I did sell before target, and we did reach target, so I left some money on the table. But you know, that's how it goes. Sometimes we still made profit, so the name of the game is to be consistent with making profit. Some days you'll leave some on the board, some days you'll even lose some money, but today we were still able to get out with profit, and so overall it was a good day. If we just take a look at the 15-minute chart here, I do keep up with the intraday broadening formations as the day goes on, but we can see here's the gap from 2 Tuesdays ago now, where we had the push that whole week, and then last week the little bit of chop early on before the push at the end of the week. We can see that we did drop down. We opened we opened down, which automatically made a lower low on the 15-minute and the 1 hour and the 4 hour charts. So we were triggered there, and all we really needed to look for was confirmation with the lower high. Now, I did enter a scalp early on in the morning, and let's go back. Yeah, so I entered at that 2584 level, which is last month and last quarter's high. I basically waited for the lower high on the 5-minute. So as soon as we got the 2 down here, now this candle did turn into a green 3, but it went 2 down first. So as soon as we cleared this, I had a trigger buy right there, so I bought right there. It did push back up, but it only made a lower high, and it stayed down underneath the 4-hour uptrend line, this dashed line right here. So we were game to stay in it. We pushed down to the opening print, did a little bit of a delay, and then we had the big drop. I guess I sold somewhere around here. Again, I need to go back and look at the exact time I sold. It was very early into the day, so I don't exactly remember, because I was also managing my longer term calls and determining whether I wanted to add to the puts. But we did tweet out that the target was 25.15, which is last week's 50% line. Again, I got out somewhere around the 25.50 area, so a little bit of profit, 25.84 to 25.50. I had 4 contracts. I was going to let a run, but I know I did sell all 4 at once. So again, minimal profit. It was just a scalp, and really just to kind of hedge against the longer, mid and long term swings that we have to the upside. So this market has been pretty tentative in going to the downside. No real big pushes to the downside, so I didn't want to stay anything too long. Again, I got out too early still. Even though I don't want to stay anything too long, it did get out a little too early. I didn't even let it get to my target point, but again, did make some profit, and did I guess protect against the higher high that we ended up making on the 5-minute. Now on the 15-minute, everything was really just falling into place. It was a higher high as well, but we were still below opening print when we rejected. So that gave you another hint that we were probably going to at least go and visit this 25.15 again, if not go further. So we wanted to look to our triggers that we had in our notes. So we had the 4-hour trigger mapped out, the 2 down, 1, 2 down, 2 up. Let's make this a little bigger. Oops. There we go. We had the 2 and the 1 on Friday. So the 2 down trigger was 26.34. The target was, or the magnitude was only 2623, so very small magnitude just right there. But it triggered the 1 2 up combo 2 down with the magnitude of the bottom of this 3, which was essentially this month and this quarter's flip, which is 2438. So if we would have went below this, it would have flipped the month and the quarter back red. We would have been in full time frame continuity to the downside at that point. So the bulls really did need to hold up right there. They hung on to this 2515 and pushed back up. If we go back to this 15 minute, so you see they hung on, pushed back up, got pushed back down, still hung on, tried to push back up again, but this high was still a lower high. It did put push down and make a 2 down, but it ended up as a hammer. So I didn't want to enter there. I was actually thinking about buying calls if it triggered to the upside, just as a scalp, to hear and see if we could run a little bit more. Just because again, this market is so bullish right now. Sometimes it's nice to buy a couple of contracts at the very beginning of a bounce and just kind of ride it. But if it wasn't going to continue to push up, we would have took our little bit of profit and then just continued to watch the market, and more than likely would have got back into some puts because something to the downside would have triggered. So in that, either way, in this case, it only made the lower high. So it did end up pushing down, making a lower low. Again, I didn't get back in anything at this 2515 area. At this point, I think I was just watching the 15. You probably could have got in on the 5 minute. Actually, not probably. I know you probably, it was the 5 minute that you would have had to get in on. Yeah, see the lower high right here. 3 1 2 down, closed, lower high right here again, and that's what really flushed it. So we had lower high followed by lower high, and once you get two of those, we've already hit this level one time, 2 times, 3 times, 4 times. This was like the 5th time, and then within the 5th time, multiple times on an even shorter time frame. So it was pretty much destined to fall. Now it did go down, create a new broadening on the 1 hour. If we look here, in the 3rd hour of the day, even though it made the lower high, it did signify the low, so we could draw our broadening formation, and you can see that's exactly what we came back down to later on in the day. If we go back to the 15, it broke through it but popped back above it again. It's hanging, it's still above it, so it's still respecting it, but it's also respecting this 50% of last week. Now we still have this 1 hour downtrend line that we would have to contend with as well. So if we do get above this tomorrow, my guess would be that we gap up. One thing to remember is anytime there's a 1% down day in the SPY in SPY, it's usually followed up by a 1% up day. Now we didn't get a full 1% down day in SPY. It was only down 0.8%, but it's down in the after hours almost 0.2%. So if that ends up being our full 1%, we could see a gap up tomorrow morning. You see that today was already pretty active with Trump on Twitter and extending deadlines and upping tariffs and things of that nature. So anything could happen overnight and cause a gap up. But that's what I believe would probably need to happen in order for us to get back above there. You see we're back below this 200-day moving average and the 50. Again, this is only on the 15 minutes, so it's a short term. It may have some work in it, and it just goes sideways before it gets up. That could always play in too. And that would actually give us a little bit more time to get an entry back to the upside. But it could gap up tomorrow. Just expect that. This price level is the opening print for today, but it also signifies the opening print for this week. So we'll go ahead and make sure we mark it as such. So we could gap up and then just get rejected by the opening print for the week, which is basically coinciding with last month and last quarter's high as well, which also coincides with the 78.6 of the 2024 run up. So again, we've still got some resistance in this area. We talked about on a higher time frame, it is kind of an area of chop. Let's go to a chart that we can actually see on. Yeah. So as we get up into this, so we're here, we're right around here, and all of this is chop. So you can expect as we get up here, it's chop. Again, we're kind of rejecting off of this monthly downtrend line. The day did trigger the 2 up, 2 down. Now it did, as the 4 hour almost went to magnitude, the day did as well. Do we have a little bit more to push, reach this magnitude, and cause a combo 2 down tomorrow? I don't know. We'll see. We're still above. In this case, we're still above on the day chart, the 200-day moving average and the 50, but the 50 is below the 200. So again, more mixed signals really. We've got room. We've got the gap that we can always close on the downside. We've got room to go down on the weekly uptrend line. So again, we want to keep our eyes open for downward movement, especially as we have these mid and long-term swings to the upside. We want to protect it, hedge against those whenever we can. Let's go back to the 15. What else can we tell from the 15? If we go into the micro time frames, yeah, the 15, we're still technically below this downtrend line, this 15-minute downtrend line here. We're still around this one. So again, we're still, we've got, if we go up tomorrow, if we open up tomorrow positive, I expect a gap up. I'm looking at after hours now. We're basically back even at after hours, so could have a gap up situation, but again, we could gap into support. If we look at the day, is there a gap? Yeah, we got a gap to the upside, so we could actually just go fill this gap. Let's go ahead and mark it out. This is our gap on the day. Oops. And the gap is from we just want to make sure that we can just look at this very easily and see this. We'll make this till 27. Alright, let's go into our notes here. Let's go ahead and mark this out in our gap section as well. So this is the gap from this morning. So get back in here. Let's go ahead and mark it out on all of our charts just to make sure. Make this a little easier to, wait, what is it? Grab the wrong chart there. Let's get it like that. Again, this is all real time with you guys. Sorry if you don't like it, but I'm just giving you what I see. And hopefully my charting method may help someone else out there. Let's see. There's 2 more charts to go. All right. Alright, just like that, we've got all our charts marked up. So if we go back in on our micro time frame again, we've got the 15-minute downtrend, the 1 hour downtrend. We're even, actually we're green now in after hours, so we may get that gap up. maybe not a gap up, but we might open up higher than we closed. Gap up might be a little stretch, but we could gap the gap as well and have a double gap, which frankly would be a little bit more of a draw to the downside if we did a double gap to the upside. We could run into last week's high. We could run into not last month, but this monthly downtrend line, this green. We've got some fib extensions here from the gap up on June 23rd. So again, we got a little bit of resistance. What else can we tell? Let's just look at these time frames real quick. So again, downtrend on the 1 hour, but it did seem to be, it hit the broadening formation. We could be bouncing at this point. If we do bounce, we can target the top of that broadening formation, probably the weak broadening first, which is this purple one, and then these would be extensions. The 1 hour and the 4 hour kind of line up, so those could be some extensions there. We could look back on the smaller, on the micro trade chart and get our levels more specifically, but we're just trying to look at this from a little bit more zoomed out picture. The 4 hour, the other thing to keep in mind too is we're looking zoomed out. We're at the we're towards the bottom of the week's expected move. So we could, even if we don't open up tomorrow, even if we push down tomorrow, it could just be down until the bottom of this week's expected move, and then push up the rest of the week. Just something to keep in mind as we zoom out and look at things. This also would be a very good place to make a higher low. This is a soft higher low right here on the 4 hour time chart, so that would be a good spot. And same with on the day. If we're going to stay in this really bullish rally, this would be a good spot to put in a higher low, continue this uptrend. We are pressing this monthly downtrend line, but if we get through it, we look at flipping the year green, and then we've got full time frame continuity all the way through. So far from the bounce in April, we've been operating in full time frame continuity for the most part, except for the year. The year is the only one that hasn't been playing along. It's still been red, and that's why I still am cautious about getting too many more contracts to the upside and going long at this point. We do have plenty for 2027, 2026, November, as well as September of this year. So we're pretty stacked up on that, and we'll really just be looking to play things to the downside that have better structure. So here, again, I was in and out of my puts quick because we're not getting any real pushes down. You get the little pullback for a day, maybe 2 days, and even that wasn't really a full pullback, because the second day a full pullback, because we see how we ended green. But we're getting these just slight pullbacks for like maybe a day or so before we push higher. So it'll be interesting to see if we continue that trend, or if we end up continuing to push down for a second day and then maybe getting a lower high on the third or fourth day before pushing down again. If we get a lower high on the day chart, possibly the 4 hour, then I may look at getting like a September put to swing a little bit longer than like a day trade. That would allow me, plenty of time to stay in it. From a somewhat short-term perspective, the delta would still be high enough, the theta would still be low enough that we could sit on it for a little while, even if the market were to go sideways. So again, remembering that we're in a greater uptrend on the week, on the day, on the 4 hour, but that we are coming to resistance, areas where there's a lot of chop and a lot of back and forth. So we want to keep that in mind. I guess maybe stay light on the contracts still, especially if you've got ones like we do that we are longer term, there's not as much urgency to kind of day trade or scalp to get a bunch of money. Um, we can those are the day trades and the scalps are a little bit more for fun. Yes, we're not just taking any setup. We want to take A plus setups, but it's not something that we're depending on because we're watching our longer term ones just continue to push higher. So I guess that's enough about today. Let's look at what might happen tomorrow. Let's go in here on the 15. Let's go to our scalping chart. Actually, let's not go to scalping chart. Let's just go to our swing. So again, we can see we went lower high with this 3. This low is 24.76. This low is 24.76. We went equal low, even though we went lower high. So again, that might be another signal. So we went higher high, then equal high. It might be another signal that we're gonna open up a little bit higher tomorrow. Um, doesn't mean we'll necessarily continue to push up after we open. That could just be opening higher and giving us a better entry for puts. But there's, I would probably say 60%, 60 to 40%, 60 to 40 odds, 60% chance that we open higher than we closed today. Tomorrow we open higher than we closed today. But let's go ahead and mark up our 4-hour triggers. That way we can have a better look. So this is the previous low a day. We're going to move it down to today's low. This is the 4-hour down trigger. So we move this to the low of the last 4 hour of today. This is the up trigger. We move that to the high of the last 4 hour of the day. And then we take to previous high a day and move that to today's high. That simple. A little bit harder to see on the scalping chart, but we can still get it done. 4-hour down trigger, activate 4-hour up trigger, and again these are color coded. Activate, so I know what they are just by looking at them. Orange is the day, gray is 4-hour. There we go. This Carolina, or very bright blue, is 15-minute. This more dull blue, almost violet right here, is not even violet, just a dull blue. That's the 1 hour. So we got 1 hour, 4 hours, 1 hour, day. Green is the month. Yellow is the quarter. Let's go ahead and edit this. This tells us that this is our opening print for the week. We color coded this red. Not sure what this price level 2 was for, but we'll remove that. Alright, so that's those. I don't have anything there. So let's go ahead and map out our targets for tomorrow. So if we're out here on the 4-hour time frame, and let's bring up our notes. I'm going to duplicate this and just roll over into Tuesday. And see July 8th. Notes from July 7th. There will be 121 trading days left in the year tomorrow. $24.97 is our closing price. The opening print for the week. Thought we already modified this. Alright. So the opening print for the week is 25.73. here. So the week will flip green at 25.73. The month will flip red at 24.38. The quarter will flip red at 24.38, and the year will flip green at 28.13. So we want this to say red and that to say red, because that will mean that the week and the year have flipped green. But for now, we will just continue to mark what we see. Let's go ahead and take a look at the 4 hour again here. So we've got a two down situation. So tomorrow would be an extension of that 2 down. So 24.62 is the low. 62. And this is just 2 down, 2 down. We have no magnitude because it's not a strat reversal, it's just a continuation. So our first target is low 24.45, because that's the low of this 3. Our next target would be right here. I would say the low of this candle coincides with this fib, which is the range of March 2025. It's the top of the range. So just because it'll probably get a little poke in there if it does push down, we'll use this as our target. So 23.58 is the next target. And let's go into our micro time frame chart to see what other targets we have. This 50 is at 23 even, so that's probably a good target. Round numbers usually do well. You can see one of our targets, this 23.58, is at 23.58, so it's probably what I would shoot for if we go to the downside. This would be a safe target. This would be a real target, and this would kind of be a stretch target if we're talking about just the 4 hour time frame. So let's go to the up signals. Let's go back out to the 4 hour chart. So the high of the second 4 hour of the day was 25.47. Our magnitude, because this is a 2 down, 2 up, will be the high of the candle previous to the 2 down. So this high is 26.05, which is also the gap, the open of the gap. So our target would be the close of this gap, which was 26.23. And we can use these two as the next target. So the high here is 26.43. And then this high is 26.72. So we'll leave it at that. 26.72 is our first higher high. So that would be our easy target, or because it's the magnitude. This could be a little more lofty target. These are definitely more of a stretch if we're looking at the 4 hour time frame. But let's go ahead and look at the day chart and see where that triggers, which if this day triggers, that makes these stretch targets a little more within reach. So let's switch to the day. If we're looking at the day, this would be a 2 up, 2 down. It didn't reach its magnitude, so it would be a combo 2 down. So this is combo 2 up, combo 2 down. Trigger is 24.62, which we've already got here because that was the low of the day. So our magnitude is 24.45 to complete this 2 down. But if we want to complete the combo 2 down, this low is 23.58. Then we can add an extended target top of this gap, which is 22.63. 63, and an extended target of the gap close, which is 21.98. 98. Okay. So again, that's even if we go down to, even if we go down to 21.98, we're not reaching the magnitude of the 2 down, which would trigger the 3-2 up, 2 down. We haven't even triggered this yet, but it would trigger the 2 down. And we could still make a higher low, get this 21.98, which is higher than this 20.28, and reverse back up. But again, we'll have to continue to play it by ear. Let's go ahead and make sure the lower lows are good. This low is 23.58. Okay, 23.58. So this would be on the day a 2 down, 2 up. Trigger being 26.05, because that's the magnitude of the 4-hour reversal, and the high 26.72 will be the target, or the magnitude. 72. All right. So our target, I'm guessing, yeah, 27.29 came from this 261.8 fib and the 28.07. Those are from the microchart fibs. 25.84 is our higher high. 26.72. I knew that was wrong. 26.72. Okay. So you see, in that, just like that, we've got all of our triggers, targets, triggers, magnitudes, further targets, triggers, magnitudes, further targets, triggers, magnitudes, further targets. We've got all those mapped out for the day and 4-hour triggers. We don't need to touch the week trigger because we're still in it. 25.84 was the trigger for the month. So since we're back below this 25.84, we want to take this bold off. The bold just signifies that we're in the strat right now. Right now it's pulled back from that, so we want to still signify it triggered. It has triggered this strat. We'll leave the underline there. That means it's triggered, but it's no longer bold. We're no longer in that strat. Same with the quarter, 2 down, 2 up. It's no longer above 25.84, so it did trigger it, but we're not having it bold because it's not above 25.84 right now. And then the year, again, it triggered the 23.50, but it's not bold right now because we're not below 23.50. Now, if we get below the 23.50, we've got to start kind of looking to the downside again. If we do go below 23.50, we'll have run the strat on the week flip. Let's just go look at that. Let's look at the week. So, sorry, we won't have run the week strat. We'll run the day strat. And then that triggers, that 23.50 triggers the week strat, which the magnitude for that would be down here at 20.28. Right? Triggers the 2 down. If we break here, we get the gap fill as a magnet. We've got last month's 50% as a magnet, and we're within this 3, which we know if we breach one side of a 3, if we come back in at 3, the target is the other side of the 3. So that's a lot of looking to the downside possibly. We are in a statistically bullish month for tech stocks. They do like June and July, they like to run, but they do also cool off pretty quickly after July for a couple months. August is a pullback month, and September as well. I think September may actually be statistically a red month for tech, but I would need to go back and check. So we're coming up on some seasonality as well, coming to the end of of runs. We've had a really good run since April. I mean, if you look at that, that's a huge run. Let's get the right tool. That's a 73% run. 70% run. So yeah, about 73% run right here. So, um, the whole China tariffs and all of that back here that caused the drop right around here. We've almost made that whole drop back up. We get up a little bit higher. If we don't, that it shows we've probably got a lower high situation on the month. Yeah, so we can see the high on the month, the higher high on the month, or lower high that was set on the month. The high that we need to clear to make a higher high is right here at 36.15. If we don't make it up to 36.15 and turn back down, that's a monthly lower high. And then we're really looking at getting some puts, unloading our 2026 calls. We'll probably depends on we'll have to evaluate the 2027 calls. Probably end up taking profit on most of them. Maybe rolling a couple since we do have some pretty good strikes, some $30 strikes, $35 and $40 strikes. So it's also a monthly. That would also be a monthly downtrend, respecting the downtrend line and a lower high on the month. We may even unload all of our 2027s and just wait to reposition. There's nothing wrong with that. Put that money into a high yield savings account. If you think it's going to take a little while more to turn around, throw it into a 4-week T-bill, something to continue generating money for you while we wait for things to flip back to the upside if we do get that lower high on the month chart. So again, that's getting a little ahead of ourselves. We're at the beginning of this month, but we just want to make sure we're looking at things from a wider view as well. Still in a current uptrend, pretty much short term, or I don't want to say short term, but if we're looking at the monthly and the quarterly as more mid-long term, the day would be considered more short term, and you can see we're in an uptrend here. We tested the higher broadening formation on the week. We've got plenty of room to pull back to stay within the uptrend for the week. So overall, still staying pretty bullish. We will keep an eye on these September, November calls. If things start to get a little too murky, we can go ahead and sell those or even roll them, take some cash out and roll them. But again, if we're going to expect downside, no point in staying in them, no point in rolling them. Just go ahead and sell them, take our profit, and wait to re-enter. That's what we read the charts for. So if that's the case, we'll go that route. But for right now, we're still pretty much buying dips. We'll see if we open up tomorrow higher than we closed today. Let's see. Yeah, we're still 25.02, so we're up still a little bit in after hours. But we've got our target set. If you want to take a screenshot here, this is the plan for tomorrow. This is the plan. You want to take a screenshot, you want to take notes, any of that is fine. If you'd enjoyed today's video, let me know. Give me a thumbs up. Do the YouTube stuff, like, comment, subscribe. I do look for any comments. Please tell me if you think there's something I can do better. But for right now, this is just how I'm going to function. No real production or edits or anything like that. This is all live, one take. I'm looking at the chart with you guys when I look at it for the first time after the market closes as well. So I haven't had time to prep any charts or anything like that. As you can see, I update them as we go. So yeah, like I said, let me know if there's things that you like about these videos. If there's things you think I can do better, let me know, hopefully in a constructive way. And yeah, I hope everybody continues to profit and be able to make money whichever way the market goes. We'll see if tomorrow plays out the way that we mapped it out today, just as the past few days, weeks have gone, pretty much how we've mapped them out. But yeah, profit a little bit more tomorrow than we did today, just because again I did get out a little bit early. That's my fault. That's not following the rules, and although I didn't lose money, not following the rules kept me from making the max amount of money I could make today. So looking to do better tomorrow, and hope everybody else has a good trading day tomorrow. Follow us on Twitter at what is it? Oh yeah, I'll just put it up on screen. At Bullish Chips. Follow us on Twitter. We do post throughout the day a lot of times with the trades that we get in, and yeah, that's a good way to keep up on us past the nightly videos. And yeah, follow us there, and look to see you guys tomorrow. Thanks.